just imagine what governments have got to do to their own finances to get to that stage. That is the challenge. And for a very long time, in this process of collapse, governments will resist this. I mean, the first thing we will see is when interest rates start rising, as they will, they'll be reflected in bond yields rather than, let's say, the Fed's policy or whatever. I mean, the Fed will be putting cuts on hold. And that's another topic, actually, the relationship with the president. But, the whole of the interest rate situation is going to deteriorate. Why? Because foreigners holding a currency and even domestic holders of currency increasingly see risk in that currency and need to have compensation for that risk. That is what a bond yield is. If you're going to buy something with a 10-year maturity, then you're not going to do it unless you can see a positive return on it. If you're seeing a negative return on it, you're not a charity. I mean, forget it. You're not in the wealth destruction business. So that, I think, is something which at the moment is an unanswered question as to quite how that is going to play out. But I can certainly see that the initial response from the monetary authorities around the world to rising interest rates will be to try and rescue their own banks where they've got into trouble, but also and particularly major zombies in the private sector. And these are zombies with political clout.